Today's topic, U.S. financial crisis. Japan, Saudi Arabia, Europe sanctioned the dollar at the same time. While Wall Street and many others are still reveling in the world of the rising momentum of the dollar index, there are already voices around the world to de-dollarize or trade around the dollar, which has long lost its trusted label, and it is clear that the U.S. has to aggressively raise interest rates and taper after the big inflation caused by the extremely loose monetary policy implemented to stimulate the economy, which only addresses the needs of its own economy without considering the spillover effects. Will overdraw the dollar credit and status, forcing the world to think about the role of the dollar. So, from this point alone, the phase of resetting the dollar as the main reserve currency has begun, and is at this juncture moment, the nearest to the dollar printing machine has issued a warning. Now, the dollar's dominant position has existed for more than 100 years, and now whether the dollar's share of international reserves or international payment use is declining is indisputable, which is a manifestation of the outside world's weakened confidence in the dollar, which has become more clear in the context of the butterfly effect of global de-dollarization is expected to intensify. The dollar is on its way to the end. In this regard, the United States senior economist Jim Rickards said on October 20th, the global need for a new independent of a country's cross-border settlement currency, the United States monetary initiatives are becoming a long-term catalyst for de-dollarization, the dollar abuse of currency dominance to promote the global market to find alternatives, can no longer be a normal world currency, forcing countries to rethink the role of the dollar. It is important to know that the credit currency is behind the financial and commodity settlement transactions. Without the transaction support of paper, money is like paper, and the reason why the dollar is the world's leading reserve currency, its back is represented by crude oil commodities are also denominated in dollars. According to the latest data published on the Federal Reserve's website, the dollar is the primary anchor currency for about 65% of the world's countries, which account for about 75% of the world's total output and complete transactions through a swift international clearing system that is indirectly controlled by the dollar. Over the past decades, the US dollar, the world's main reserve currency, has been able to call the shots on the SWIFT system and thus indirectly control the exchange operations between international currencies. In other words, if any economy is not compliant with the US dollar, then it is likely to be subjected to the SWIFT system. In other words, if an economy does not comply with the US dollar, it may be subject to special restrictions of the SWIFT system, resulting in the country's inability to receive normal overseas remittances. At the same time, the U.S. controls the U.S. debt as the center of the global foreign exchange reserves, so the minting tax, and through the dominant position of the U.S. dollar, can be several times the water to print money to cut other people's leaks, to solve their own crisis, but now the situation has changed. The following new news is even more surprising for investors. There is no need to doubt that the cracks in the current dollar-dominated international settlement financial system are widening internally between the U.S. and its economic allies, changes that we can find in the latest top stories. After the Saudi-led coalition of oil-producing countries rejected the U.S. request to increase production to control inflation, cracks appeared in the economic strategic relationship between the two countries, and Saudi Arabia, as a party to the petrodollar, has come under increasing criticism from the U.S. In response, Saudi Arabia began to fight back, declaring that it would consider ending the petrodollar agreement early and selling oil in the local currency of the counterparty in some specific markets, indicating that the petrodollar seems to be in trouble, and will be the beginning of the contraction of the dollar's currency status. Proceeding at the same time, Japan, in an effort to control the devaluation of the yen and soaring inflation expectations, the Bank of Japan, in addition to selling U.S. debt at a liquidation pace, has joined several major banks in planning to create a cross-border currency network system for digital currency payments, similar to SWIFT, and has advocated working with a number of countries, including Iran, in the commodities sector to bypass the dollar and increase financial options to reduce the impact of a strong dollar on that country. Immediately after, the EU, represented by Germany and France, also proposed to use the euro as the default currency for energy contracts with third countries and a draft plan to challenge the dominance of the dollar in the global market in 2023, which was updated and released on October 17, and announced plans to create futures contracts for crude oil priced in euros in 2023, which means that the EU will formally show its sword to the dollar on all fronts. Obviously, now that the voices of de-dollarization have been heard everywhere, the dollar has once again lost its trusted label, and even the Americans themselves now find it increasingly untrustworthy. In response, Peter Schiff believes that such an outcome would put gold and digital currencies backed by the local currencies of strong economies or strategic resources at the center of the global central bank monetary system, thus bypassing the dollar. Again, to the market's surprise, since 2008, their counterparts in emerging markets and Europe are dumping US debt in favor of gold at a rate not seen in more than 50 years. As the data in this chart below shows, there is once again an inflection point after May 2021 when global central banks begin to significantly sell US debt in exchange for gold, as illustrated by Japan's US debt positions, which are now also falling below new lows in the last 3 years, and the selling is very strong, according to the data. At the same time, the EU, Russia, and emerging markets are making a joint revaluation of gold's strategic economic value. The Dutch central bank, for example, wrote an article suggesting that gold could serve as the basis for another monetary system and seems to be favoring a gold standard, which rather surprised the market as it was a warning to the dollar from a Western central bank that offers negative interest rate loans. According to the statistics of the BWC Chinese Baccarat financial research team that continues to track the reports of de-dollarization, at present, Russia, Germany, France, Saudi Arabia, Japan, Iran, India, Italy, UK, Indonesia, Malaysia, Nigeria, Pakistan, Venezuela, Iraq, Singapore, Canada, Switzerland, Sweden, Romania, Spain, Ireland, Netherlands, Armenia, Portugal, Kyrgyzstan, Hungary, Brazil, South Africa, Kazakhstan, Thailand, Israel, Lithuania, Kuwait, Belarus, Turkey, Qatar, the United Arab Emirates, Angola, Cambodia, and other countries, including at least 40 representative countries, began the process of de-dollarization of the center in their own way. And to the Fed's further surprise, the central banks of Japan, Europe, Sweden, Switzerland, UK, and Canada, as well as the Bank for International Settlements, have also come together to form a group to develop a digital currency aimed at de-dollarizing some areas of commodity trading or financial settlement. But things don't end here, and more unexpected things are still emerging. For example, Saudi Arabia is also opening a way to develop a digital currency for transactions to replace the dollar in the economic and trade related to the UAE. Another new development is that after the de-dollarization of 40 countries, 4 more countries have joined this process, according to a report published by the Cuban Central Bank on October 21. Cuba has asked foreigners not to bring dollars to the country because they will no longer be accepted. Immediately after, several other countries whose economies were dollarized also publicly called off the dollar, once again surprising the market. According to the latest news released by the authorities of El Salvador, the country has used cryptographic digital currency to become legal tender to replace the US dollar, followed by Latin American countries, including Paraguay and Ecuador, which are also accelerating the development of digital currency. The global central banks abandoned the US debt, and the US own reasons are closely related, the US created the Ukraine crisis, freezing the Russian foreign exchange reserves. You know, Russia is a global military power. The US can freeze his assets, which undoubtedly makes other countries are very worried about the bottomless behavior of the United States, but also seriously damage the credit of the US debt. Abandoning the US debt is also a national strategy of peace and security. At the same time, the US national debt has not only exceeded $31 trillion, but also the US has serious inflation, and more frighteningly, Bloomberg economists Anna Wong and Eliza Winger's recession probability model prediction shows that the probability of a recession in the US economy has reached 100%, so that global countries are worried about the US economy. American capital pursues high profits and light assets, and American Apple and Tesla are typical representatives. This makes the hollowing out of the US economy very serious. And although the US government has introduced very many policies to make the manufacturing industry return to the US, the effect is very limited in front of this deep-rooted ideology.